Hello, you're watching One2 Tax. In this video, we're looking at deductions. Deductions, as the name suggests, are amounts that you may deduct from your gross income in order to determine your taxable income. That means that if we want to minimize our taxes, we want to maximize our deductions. So this is a key tax avoidance technique, is to be able to claim every type of deduction that is available to you in order to minimize your taxable income. This will allow you to hopefully claim a rebate from SARS if you have included your deductions in your tax return. Deductions are determined with reference to the Income Tax Act, and there are specific general formulas or definitions in Section 11, read with Section 23 of the Income Tax Act, which allows us to claim deductions, while there are also other specific instances in other parts of the Income Tax Act which also allow us to claim deductions. We will look at examples of those shortly. The general definition which allows us to claim deductions is situated in Section 11 of the Income Tax Act. As you will see, it corresponds to the gross income definition, but this time we are dealing with expenditure and losses as opposed to income. As you will see, the elements are on the screen, and most importantly, in order to be able to claim expenditure or losses as a deduction, it has to be in the production of income, and it must be while carrying on a trade. Those are probably the two most important parts of the general definition. And also the expenditure must not be of a capital nature. And we'll look at what that means in our next video, because it also relates to the gross income definition. Then I've also mentioned that Section 23 of the Income Tax Act is also important for the general definition, or for generally determining whether something is deductible. This section lists different instances of types of expenditures that aren't deductible, even though they may comply with the requirements in Section 11. Most importantly for our purposes is expenditure related to your employment. So if you are an employee and you expend amounts in order to, for instance, drive to work, you cannot claim those amounts back as deductions, even if they fall under the definition of Section 11, unless you earn more than 50% of your income based on commission or sales or turnover related commission. But there are, of course, amounts that people that are merely salaried employees can claim, and we're going to focus on those in this course. Some examples are contributions to your pension savings, amounts spent on legal fees in disputes with your employer, depreciation of assets for employment, amounts spent on home offices in certain instances, and likewise amounts spent on work travel only in certain circumstances, medical expenses, and donations to public benefit organizations. We are going to look at each of those examples in more detail later in the course and show you exactly how you can utilize those expenses in order to minimize your taxable income and claim a nice rebate back from SARS at the end of your tax year. That's it for this video. In the next video, we are going to consider what it means for something to be of a capital nature. Thank you for watching.